David Bishop is the Manager of Capabilities in McKinsey's European insurance practice. He has been in the insurance industry for his whole career and now works with McKinsey's client services teams to help them bring the best of the firm's capabilities and knowledge to insurance projects, especially in digital, analytics, distribution and claims. He also has a special interest in innovation in the direct channel. Every year, at McKinsey's own Direct Insurance Forum, David presents a review of the main themes that have dominated the innovation landscape. We have invited him to share that presentation with us here today at DIA Prime Time.
Hello everybody, and welcome to this rapid global tour of innovations from the past year in direct selling of insurance. As we'll see, there's been a lot of innovations in that time, and we're going to group them into 6 themes. Of course, the global pandemic has had a huge impact on innovation, so it's important to start by recognizing the direct has been adapting for customers who are experiencing a very difficult time. Insurers have taken numerous actions to help customers. We've seen flexible or delayed premium payments, refunds, relaxed claims criteria, free cover extensions. Let's look at a few specific examples of stepping up to help customers. Allianz Direct wanted to recognize the importance of doctors, nurses and care workers. Its Corona Mobility Guarantee is free for health workers and gives them fast breakdown assistance any time of day or night. Beyond motor, direct insurers are increasingly serving the self-employed and small businesses, and the coronavirus has hit these customers harder than most. For the growing number of gig workers, it can be hard to stabilize their income, and the lockdown turned that problem into headline news. Collective Benefits embrace this by developing products to give gig workers the same benefits and protections as employees. To help customers who were ill and couldn't see a doctor because of quarantine, Collective said that rather than the usual signed doctor's note needed for a claim, they would accept a call note from the NHS helpline instead. One set of gig workers in difficulty is Uber and Lyft drivers. Many drivers turn to package delivery to make up the loss of income. Buckle insures Lyft drivers in the US, and at no additional cost, it added cover for delivery of food, household supplies and other packaged goods. The increase in cyber risk because of home working led Zaguro to offer cyber safety insurance free of charge for 6 months. And over in China, the CEO of Weisure, Alan Lau, told how the day after human-to-human transmission of COVID-19 was confirmed, they brought out a new hospital cash policy and 15 million people bought cover. They were also quick to develop a new business interruption policy in early February for small businesses. Now, these are often run by a husband and wife team, and they're critical to the Chinese economy, but they're also vulnerable. The policy pays compensation for every day they can't open their business. Dingy is a freelancer platform backed by Allianz, who offered up to 2 months of free professional indemnity cover and also 2 months free freelancer assist, which helps with the important and very practical task of chasing unpaid invoices. Insurtechs like these continue to be a rich source of ideas, but even before the pandemic, we were starting to see which ideas had momentum and which were struggling. Some have already closed, especially gadget or on-demand propositions, usually citing problems in capturing volume. Some say that personal lines insurtechs are so niche that volume is always going to be a problem. Others disagree, saying look at the ad tech sector where there are thousands of companies. AXA closed Fizzy, its flight delay offering, saying there wasn't enough market appetite yet. Buzzfold stopped writing policies. Trove has had ups and downs all by itself. It closed its UK on-demand proposition due to lack of demand, but then reinvented itself as a B2B2C insurer with a renter's insurance app partnering with Halifax Home Insurance, and also opened up in Brazil. Pet insurer bought by many has received almost $100 million in funding. Lemonade, whose mission is to become the world's most loved insurance company, filed for and had a very successful IPO. telling a growth story of planned expansion to new countries and new lines of business, including pet insurance. And the US pet market is perhaps surprisingly underpenetrated. One thing all insurtechs have in common is a digital business model, which positions them well as we are forced to do more and more online. When asked, how well placed are you to trade in the event of travel restrictions and quarantine, CEOs of these insurtechs told journalists at Insurance Post of a smoother transition than for many traditional insurers. No interruption of service, a workforce in some cases working remotely already, and even record new business as customers have become keener to shop around and save money. Investment in insurtechs is telling its own up and down story. The drop was particularly sharp in Q1 this year, but it's encouraging to see a bounce back in the second quarter. Now, some are still saying that on the whole, insurtechs have simply not yet threatened traditional players enough. Their challenge is perhaps best expressed by looking again at that trio of US insurtechs that provide transparency on performance: Lemonade, Metromile, and Root. They've all reported improvements in combined ratio, but looking here at premiums, it would still be too early to describe them as market disruptors. Lemonade still accounts for much less than 1% of the US home insurance market. Root is showing the sort of dramatic growth trajectory you might expect from a startup, but again it accounts for less than 0.2% of the motor insurance market. Metromile is of course in the pay-per-mile business, and during lockdown, with so few people driving, there's been a lot of discussion about whether it's time for a decisive shift towards more flexible car insurance, for a world in which we might have more volatility in how much we use our cars. Two things in 2020 helped to highlight this debate. First, premium refunds provoked a lot of discussion. The CEO of Ageas commented that small refunds amount to little more than a marketing initiative, and the National Bank of Belgium even asked insurers not to give refunds because it's too short a period for an initiative like that. Metromile pointed out that its pay-per-mile customers had already saved 30% on average during March, which was more than State Farm's discount and double what several other insurers were offering. Customer research by J.D. Power in April, after US car insurers had refunded some $10 billion, concluded that the discounts appeared to be pushing customers to seek alternatives. Only 37% of customers were even aware of the discounts, and those customers were significantly more likely to shop around, switch, or cancel. The second trend, leading to a rethink of the motor policy, is the inexorable shift to a world in which the car, not the driver, is the primary risk factor. Sensor technology has made huge advances and can respond faster to some risks than humans can. And this was dramatically illustrated by an incident caused by Storm Dennis in February in southern England. A man was driving with his family in his Tesla Model X when a large oak tree was suddenly blown down. As the tree came down, the Tesla slammed on its automatic brakes and the tree landed on the car's bonnet. Remarkably, a car travelling in the opposite direction, also carrying a family of 4, was another Tesla, and the technology worked in the same way just in time. Both cars were write-offs, but thankfully nobody was injured. This combination of flexibility and safety is prompting new product development in motor. Elon Musk said he expects motor insurance to grow into a major product for Tesla. By Miles is launching a connected car policy specifically for Tesla drivers. It pulls mileage data from your Tesla and you can make significant savings. By Miles say the insurance industry needs to catch up and launch policies as smart as the cars themselves. Delivery drivers became highly visible key workers during the lockdown, and in June, Marsh and AXA launched Delivery Pro to help businesses meet the growing demand for same-day delivery. Many small businesses rely on individual drivers who use their own vehicle, but commercial motor insurance can be hard to get at a reasonable cost in those cases. Delivery Pro covers the driver only while on an active delivery, so businesses pay only for the cover they need. Naked Insurance of South Africa offers cover pause. With a single tap of the app, you can pause the accident portion of your cover and downgrade to stationary cover on the days that you're not driving. Naked says you can save up to 50%. So are we seeing a decisive shift towards pay per use? Another JD Power survey found that 40% of car insurance customers say that since lockdown they are more willing to consider usage-based insurance. That's 3 times higher than before lockdown. Other telematics experts think that a few weeks of lockdown are unlikely to structurally change customer preferences. Whatever the future for UBI, automation and technology were already affecting all areas of the direct customer experience. The pandemic has only accelerated these trends. At a conference in January, Admiral described how customers regularly log in to its new online self-service portal, leading to a big drop in calls to its help centre. An impressive 4.5 million of their 6.5 million customers have signed up to use the portal. Aviva had a similar experience with claims. They launched Your Car Repair in 2019, which allows customers to do online booking of repairs and to track their progress. Aviva revealed that 4 out of 5 customers across all age groups choose to manage their repair themselves. An area where we may see more automation is car insurance renewal. A new insurtech called Renewal planned to use AI to enable auto-switching each year. They collect your details and plan to automate the process of finding the best deal and carrying out the annual renewal. So Renewal's proposition is that you shouldn't have to choose between either overpaying or the very manual process of shopping around. Meanwhile, Cora is a new app that can manage all car-related payments like parking, insurance and even fines. The app is integrated with the UK's national car parking technology and other national systems, allowing your phone to take care of everything. It's a kind of car payment ecosystem to make life easier for motorists. An intriguing new use of AI comes from a PhD researcher at the University of Warsaw, who has been using AI on Google Street View images of houses to predict car accidents. A team of researchers filled in questionnaires about the characteristics of 20,000 homes based on their Google Street View photo. They created a risk model that turned out to be 10 percentage points more accurate than an insurance company sample at identifying car accident risk. The research got press attention with some quite alarmed reactions from readers in the comments below the article. It does, however, raise the important question of whether I can make big savings on my car insurance by finally getting around to repainting my front door. A more traditional product, normally associated with face-to-face selling, has had to embrace direct. Direct is seeing more of life. An early signal of this was apparent on Google Trends. COVID-19 seems to have created a spike of interest. Google Trends tracks the relative interest in keywords over time, and a score of 100 means the most searches over the period covered, which here starts in 2011. The peak for life insurance occurred in the US in January-February 2020, and this pattern was the same in global data. Traditional life insurers have responded, for example in Hong Kong. Sun Life launched a new digital end-to-end sales system that enables purchase from home. And new digital value propositions are also available. Simplify Life claims to be the first digital platform in Hong Kong to offer customers a dynamic term life policy with cover that adjusts automatically as they hit major life milestones. The medical test is replaced by a health and lifestyle questionnaire, and customers can get a quote and buy in under 15 minutes. In the US, Avibra integrates well-being and life insurance. Just by downloading the app, you get $10,000 in term life cover with no medical underwriting. There's then a basic subscription of $3.99 a month, and cover is increased if you develop good habits by completing activities in the app, like health quizzes, educational videos, even a guided meditation series. A technology that may help direct life to accelerate is Lapitus, which examines your face to determine how long you will live, your health status, and disease susceptibility. Lapitus recently tested the software on the faces of the US presidential candidates. When the next term begins, the White House will be occupied either by 77-year-old Mr. Biden or 74-year-old Mr. Trump. And Lapitus's chief science officer discussed the probability that these candidates will have good health for the next 4 or possibly 8 years. The final theme is recent innovation that may become more important to us in the next normal. One day, we'll go back to being commuters, go shopping again. Students will return to university in person. We'll fly on aeroplanes, take taxis, maybe even go on summer holidays. And direct insurance will be there to meet us. Commuting may change, and Zego sees potential in insuring e-scooters, perhaps the next revolution in urban transport. Regulation across Europe is inconsistent, but Zego has struck a deal with e-scooter startup Dot in France and Belgium. As for shopping, we may be more likely to buy insurance in IKEA. It's offering customers in Switzerland and Singapore online home insurance in partnership with Swiss Re. Students will once again experience the ups and downs of flat sharing. Splitsurance was created by Allianz in Switzerland for university students and young people sharing flats, with liability cover and up to 3 high-value items. When we take flights again, we might want to keep our options open. In Singapore, you can go to PinFare. You can pin as many as 3 flights at their current prices up to 3 weeks before departure dates for 7 days. If the price of a flight increases by more than 10% during the insurance period, you can submit a claim. What about taking a taxi? I haven't done that for a while, but if I were in Singapore, I can now buy cover against surge pricing caused by rain. Droplet plans to shield ride-hailing customers from surge pricing and will pay up to 60% of your fare or cancellation fee if you book through a ride-hailing platform and it's raining at the point of pickup. You must purchase cover at least a day ahead. Our summer holiday options may be more limited, but Setu has partnered with campings.com for a new kind of weather insurance. European travellers booking camping holidays in France, Italy and Spain can cancel and be compensated 72 hours in advance if rain is forecast. Setu issues a notification of forecast rain to campers, offering them the option to cancel their booking. If the customer cancelled, compensation is automatically paid with no need to make a claim. In the meantime, we'll keep on working from home. And Chubb has come up with a policy for that. Its work-from-home insurance is available in the Asia-Pacific region, and it means employees diagnosed with stress disorders will receive payment for psychological counselling, treatment of postural injuries, and accidental death and disability cover for slips and falls in the home. So with that reassuring thought, we've reached the end of our lightning tour of the impressive scale and scope of innovation that you are driving. Here is a recap of the themes. And if your favourite innovation was not mentioned, please do get in touch with me because I'd love to hear about it. Thank you.